World leaders voiced their concerns about Donald Trump's 25% steel and aluminium tariffs. Meanwhile, Asia-Pacific markets mostly rise despite that tariff uncertainty and recession fears in the United States. And we will explore the Turkish economy amid a 3% GDP expansion. Hello there, great to have you with us. My name's Neil Harvey, here with the latest business and finance news for you on TRT1. Trade tensions once again making headlines with new US tariffs reshaping global markets and sparking reaction from major economies. Some countries are responding with countermeasures. Others, though, are looking for ways to try and navigate this shifting landscape, while investors, well, they're closely watching the developments and seeing how they'll impact industries, markets and economies globally. Now, the US has officially implemented that 25% tariff on all steel and aluminium imports. It comes into effect as of Tuesday, March 11th. US President Donald Trump initially threatened to set tariffs at 50% for Canada, but backed down after Canada suspended a planned tax on US-bound electricity. The tariffs are expected to increase costs for manufacturers and could spark further trade disputes. Well, tariffs on Canada and Mexico came into effect on March 4th, the 25% rate right across the board, but just 2 days later, Trump announced a pause on tariffs for USMCA-compliant goods and services between the three nations. That would be until April the 2nd, another date to keep an eye on. Despite this, he's hinted at new tariffs on Canadian lumber and dairy products, keeping trade relations there on edge. And the US imposed an initial 10% tariff on Chinese goods back in February before doubling that rate to 20% on March 4th. And China didn't mess around in retaliating, slapping quickly a 15% duty on American farm products such as chicken and pork. That came into effect last Monday. The economic standoff between these two giants continues to escalate, and it is impacting global markets. Okay, let's take a look at the numbers. Now, this is a bit of a surprise. Despite the uncertainty, Japan's Nikkei 225 inched up just 0.12%, but up. The Topics rose 0.92%, reversing earlier losses. South Korea's Kospi also saw a 1.5% gain, with the Kosdaq up 1.35. Not all good, though. So let's have a look at how the reactions came from Hong Kong's Hang Seng Index. It slipped 0.67. China's CSI 300 dropped 0.3%. That reflects people don't really know what to do here. We've got some seriously mixed investor sentiment. And losses in Australia's S&P ASX 200 widened to 1.58% in just the last hour. Now, the trade war, in particular between the United States and Canada, that is heating up after a provincial leader threw a wrench into negotiations. It sparked the Trump administration to momentarily double tariffs, the threat anyway, on steel and aluminium, and then later changed their minds. This all with Canada in the midst of a transference of leadership. TRT World's Daniel Neri explains.
More tit-for-tat moves between the US and Canada, with Trump raising tariffs on Canadian steel and aluminum to 50%.
So he has made the decision to add a 25% tariff. So now steel and aluminum tariffs will come into effect tomorrow at the rate of 50%.
Reiterating that the tariffs would go away should Canada allow itself to be absorbed by the U.S.
Canada is a neighbor. They are a partner. They have always been an ally. Perhaps they are becoming a competitor now. But as the president also laid out in his Truth Social post today, he believes that Canadians would benefit greatly from becoming the 51st state of the United States of America.
The move comes as a retaliation against Ontario Premier Doug Ford, who added a 25% surcharge on electricity being fed to Minnesota, Michigan, and New York. The decision was rescinded after an olive branch was extended by the United States Secretary of Commerce.
I've agreed to suspend temporarily, and we always have that tool in our toolkit, until we sit down over the next day or two. I'll be heading down to Washington, and I thought this was the right decision. They understand how serious we are about the electricity and the tariffs, and rather than going back and forth and having threats to each other.
By far the top supplier for both steel and aluminum to the United States, Canada exported $9.4 billion worth of aluminum and $7.1 billion worth of steel to the U.S. last year. Trump announced he may reduce the tariffs following Ford's decision.
Will you make a different decision now about the tariffs on Canada, where you reduce it.
At that, but probably so, yeah. He was a gentleman.
A volatile day with many more likely on the horizon. Danielle Neri, TRT World.
Well, the European Union will also impose counter tariffs on $28.33 billion worth of US goods as of next month. That in response to the US tariffs on steel and aluminium. That's according to the European Commission. Meanwhile, Australia's Prime Minister Anthony Albanese has criticised the US decision to put 25% tariffs on Australian steel and aluminium, calling it a not friendly act. But despite the frustration, he confirmed Australia will not retaliate with its own tariffs on US goods. President Trump's move to get rid of all previous exemptions to increase tariffs from 10 to 25% is aimed at boosting US factory jobs. But his shifting trade policies have unsettled the global markets and raised concerns about a potential economic slowdown.
The United States' decision to impose tariffs on Australian steel and aluminium as part of a global decision are concerning. It has been foreshadowed that no country, regardless of its relationship with the United States, has been granted an exemption. Such a decision by the Trump administration is entirely unjustified. This is against the spirit of our two nations' enduring friendship and fundamentally at odds with the benefits that our economic partnership has delivered over more than 70 years.
OK, let's get more on this story from Mark Humphrey-Jenner. He's an Associate Professor of Finance at the UNSW Business School. Great to have you on. Let's just put the markets to one side for a moment and talk about, real-world events here. The industries and the companies, the manufacturers, how are they going to be impacted by these tariffs?
Well, firstly, thanks for having me. And the tariffs are not going to be great news for really any of the impacted companies. Now, it will, of course, depend upon how significantly they're impacted and whether they've needed to take countermeasures to get around them. But there's no way this could possibly be beneficial. So I'll give you an example. Apple's a company that has taken steps to try to mitigate the impact of the tariffs, but the cost of doing that is $500 billion worth of additional spending in the United States. TSMC is another one. It's tried to take steps to mitigate the impact, but the cost of that is another $100 billion worth of expenditure on factories for semiconductors in the United States. Other companies in Canada, for example, are going to be very adversely affected. And we've seen talk that many of the car manufacturers are going to really struggle, particularly if they can't move the manufacturing from, say, Canada to the US or Mexico to the US. So universally, this is going to be negative news for overseas companies, but also negative news for US companies because their input costs are now going to go up. And it's not clear they'll be able to recoup that from customers who are already struggling with a cost of living situation in the US, meaning they can't necessarily pass on the cost that they are bearing.
Mark, it's fascinating to hear you say that some companies are already trying to bring in measures to deal with the situation of the changing tariff numbers because they are changing in such real time. So Donald Trump imposes tariffs. Other countries respond. China have already done it. The EU said they are going to respond. Trump's already threatened to double tariffs on Canada, then changed his mind. With these numbers doubling in seconds and then reversing moments later, it's frightening where things might go. Where do you see this going? Are we looking at an escalating trade war?
Absolutely. We've seen almost changes daily in the tariffs. So the Canada one's a good example. There were tariffs that were going to go into Canada, and then they were paused for a month, and then they were brought back in. And then Canada initiated its retaliatory measures. Then Douglas Ford imposed additional retaliatory measures, but then they wound back when the US decided to meet with him to try to mitigate the impact of the additional 25% tariff, or tax rather, that Canada was going to impose on electricity exports. Now, this means it is very difficult to keep track of exactly what will be happening, but there are going to be variations. So, for example, Canada has signaled it's going to engage in retaliatory measures. Europe has signaled similarly. Australia, by contrast, has signaled it's not going to engage in retaliatory measures, probably assuming that it probably wouldn't really have much of an impact if it would do so, so it's better to try to not go as aggressively. So there's going to be a lot of variation across country, but it does appear there'll be quite a bit of variation, at least until April 2nd. On April 2nd, we've really got the deadline or date where the US is going to be in its reciprocal tariffs. That might give us some certainty for what the tariffs might look like going forward, because it flags the US at least might try to bring its tariffs in line with the trade-weighted tariff the other countries imposing on its goods, potentially adjusted for things like subsidies and the like. But thereafter, it seems less likely we're going to get these daily changes, and at least might be a little bit more predictable.
We saw today some of the Asia-Pacific markets up a little bit, which was a surprise. What do you think is happening there? Is that just a correction? They were too fearful yesterday, or are they seeing something that I don't know about yet?
It's certainly an interesting one looking at the markets. Now, there's probably a few reasons, and I guess we're just trying to mind read what traders are thinking here, but there's probably a few fundamental reasons we saw markets increase today. Part of it is just there's been so much negative news that eventually that's all going to be priced in, and then the market will be looking for new news coming forward. That would be part of it. Secondly, particularly in South Korea, we saw Samsung and SK. They seem to surge recently. Now, that appears to be, at least in part, on a hope that stimulus plans in China are going to be beneficial to those companies, and they really help to drive some of what was happening within South Korea. Then we've got the situation of the negotiation between the US and Canada. So if we look at US trading just last night, or in the most recent day of trade US time, we saw actually quite a lot of volatility. The market was going down on the Canadian electricity tax, but then it reversed course when Howard Lutnick agreed to meet with Doug Ford. Perhaps that was interpreted as a signal the US might at least negotiate on tariffs, and it might not be quite as negative going forward. But of course, we are seeing other markets being quite negative. So Australia is an example here, where the market really nosedived, and that appeared to be on the back of surprise news that Australia was running a trade surplus with respect to the United States, which could potentially exacerbate any tariffs being brought in. So we're seeing mixed reports, and some of it depends on the fundamentals of that specific country.
Great explanation. I really enjoyed that. Appreciate it. Mark Humphrey-Jenner is my guest. He's an Associate Professor of Finance at the UNSW Business School.
Thanks for having me. It was great being with you.
Turkey's automotive industry has long been a driving force in the country's economy, maintaining its top position in export rankings. For 18 of the last 19 years, the sector has led the way. 2024 was no exception. Omer Bakalolu reports from Bursa.
From the factory floor to the global marketplace, Turkey's auto industry is firing on all cylinders. It remains the backbone of the country's exports, powering Turkey's economy constantly over the past 2 decades. Last year, automotive exports jumped by 6%, reaching over $37 billion. That's more than 1 in every $6 Turkey earned from selling things abroad. One company fueling this success is Mando in Bursa, Turkey's car manufacturing hub. They produce the parts that keep vehicles running smoothly.
As Mando, we are producing the shock absorber. There are 2 types, rear and front shock absorber also we are producing. We are supplying most of the OEM in Turkey and also in the European side, including the Germany, France, and then also the other countries.
Despite the global car market facing a bumpy road in recent years, the Turkish company not only maintained its position, but has managed to grow its sales by forging partnerships with new allies.
According to export side, Turkey increased 2.5% compared to previous year. However, Bursa increased to 3.3% compared to previous year, and as we are Mando increased 27% compared to previous year. So we are growing up very fast, and this year also we will be increase our export number 42% compared to previous year.
Turkey's auto industry is not just keeping pace, it's accelerating. And with production lines running at full speed, companies like Mando will remain in the driver's seat of the country's exports.
In 2024, overall shipments abroad hit an all-time high of $262 billion, despite challenges to global trade. Automotive companies started 2025 with a bang, increasing shipments abroad by 8% in January to $3 billion. That's helped overall exports, marking the highest January figure of $21.2 billion. As the engines of the auto industry rev up, Turkey is now in the fast lane, staring toward another record-breaking year for exports. Ömer Bakaloğlu, TRT World, Bursa, Turkey.
Meanwhile, Turkey's economy grew more than expected in the fourth quarter, despite high interest rates aimed at curbing inflation. GDP expanded by 3% in the final 3 months of the year. That brought the full year growth to 3.2%. It marks an acceleration from 2.2 in the third quarter, 2.4 in the second quarter, thanks to increased household spending. The country's central bank raised its benchmark rate by 4,150 basis points over the course of a year to cool inflation before beginning rate cuts last December, following signs of improvement. Consumer price growth slowed for the 9th consecutive month in February to reach its lowest level since July of 2023, suggesting that the country is making progress in its efforts to tackle inflation. Okay, let's bring in Filiz Katman, President of the Energy, Politics and Markets Research Centre at Istanbul Aydın University. Great to have you on the show with us. So Turkey's economy, as I mentioned there, performing better than expected at the end of last year. What was driving that?
It is primarily the program which is called as Comprehensive Reform Policy announced by Mehmet Şimşek, Minister of Treasury. And the reforms made in that program have been giving the fruitful outcomes. We also have key industries which contributed heavily with regard to export performance that you have already mentioned in the video just minutes before. Automotive industry is one of them, but we also have another one which ranks Turkey as #1 in the world, and it is production of unmanned air vehicles, and also Turkey ranks number 11 globally in the defense industry. That's why these key industries created a huge contribution to the economic growth with the export performance, and primarily what have been planned within the comprehensive reform policy will keep contributing to the economic growth and economic performance of Turkey.
I mean, you mentioned it there, Turkey's exports, record high last year in fairly uncertain times economically. What is the significance of increased exports? How does that influence the growth of a country's economy?
It's a driving force, we should admit that, and we have also contributing policies with regard to value of Turkish lira in order to give some kind of competency with regard to other rival products from other countries. And also we should consider the ongoing developments in the international agenda, which gives extra focus or importance in the strategic location of Turkey, connecting the two worlds. And the recent developments and recent diplomatic efforts made by Turkey to contribute to stability in the world also paved way to have better relations. We have seen the ambition of China, ambition of Europe to have better relations with Turkey, especially with the #1 position in the unmanned air vehicle production of Turkey. They will give extra focus or extra interest by other countries to have better relations. Recently, Canada, for example, wanted to have a deal with regard to these unmanned air vehicles.
Filiz, thank you so much for being my guest. Filiz Katman, President of the Energy, Politics and Markets Research Centre at Istanbul Aydın University. Okay, let's take a quick look at other business stories making headlines today around the world. Let's see now. On Tuesday, the US House of Representatives approved a stopgap measure to prevent a government shutdown. The plan, passed along party lines, funds the government through to September 30th. That gives Trump time to push his agenda. The bill will now head to the Senate. Its approval there remains uncertain. If it fails, a government shutdown could lead to widespread economic disruption and tens of thousands of public employee layoffs. Salesforce revealed plans to invest $1 billion in Singapore over the next 5 years, focusing on accelerating the country's digital transformation. The investment will support the adoption of Salesforce's AI platform Agentforce, aimed at enhancing the workforce with digital labour. The company will also expand its research and development initiatives in Singapore. Hundreds of CEOs and government leaders from right round the world attend Sustainable Markets Initiative at Hampton Court Palace in London. The summit there sets out the economic case for a transition to a sustainable future. Tulay Kalyon Hasnadarolu speaks to Dr. Hubert Danso, Chief Executive Officer and Chairman of the Africa Investor Group, for more.
Big business meets big ambition in London at Hampton Court Palace. Global CEOs and world leaders are here for the Sustainable Markets Initiative. His Majesty King Charles III launched this initiative 5 years ago to drive a global greener economy. Now, to discuss it more in detail, I'm joined by Dr. Hubert Danso. Dr. Danso, thank you so much for joining us.
It's my pleasure.
So it has been 5 years since it's been launched. How far has it come?
Well, I think, first of all, we just have to again pay tribute to His Majesty King Charles III for having that bold vision, bringing us together 5 years ago to really place private sector at the heart of driving sustainability as the key underlying principle for value creation for a new, sustainable and better planet and low carbon economy. And I think this Astra Carta roundtable and exhibition, bringing together 300 of the world's leading business leaders and CEOs, is really a testament to, you know, the accomplishments that we've made today. We're talking about over $2 trillion have been invested by SMI, and commitments have been made by SMI since His Majesty established us over 5 years ago.
Amazing number, amazing facts. So where do you see the global economy in the next 5 to 10 years? And what is Africa's role going to be in it?
Well, I see the low carbon economy moving forward at pace. I see that being driven on a collaborative basis with business and government. I see government working much more closely on a mandate-aligned basis with us, creating that enabling and hospitable environment for us to innovate. I mean, if you just look at what we've been able to accomplish in the last 5 years, working with governments to be able to put in place the right levels of regulation, we've been able to dramatically reduce the cost of green technologies. And I think Africa is going to play a central role in that. A lot of these conversations here have been talking about Africa's superabundant natural capital, and that is the real currency of the future. About $6 trillion worth of natural capital the continent has, and we're always finding new ways to establish that as a globally competitive investable asset class, which now innovatively, through the work of the Africa Council that was launched at the Commonwealth Heads of Government meeting last year, can now be designed so that it can be put on African governments' balance sheets.
So economic growth or net zero goals, do we have to make a choice?
I think they are one in the same. We're talking now about a low carbon economy. That is the future, and that combines sustainability, environment, and it's an economic reality. If we don't deal with the climate, it's a financial risk, and it's also a business opportunity. It's a contribution to ensuring that we've got a resilient and sustainable economy for all. So I think they're one in the same, and that's the way that we really do look at it. We're not separating one. It's not a trade-off. It's an opportunity that we need to run towards.
Now, on Wednesday, South African lawmakers will have to pass the budget for Africa's largest economy following last month's unprecedented delay due to a disagreement over an increase in VAT. Trade unions and economists, they are hoping for a bold, progressive and aggressive budget that will, they hope, stimulate the economy and slash the country's impossibly high unemployment rate. President Cyril Ramaphosa's unity government, that is also under the spotlight, as Crystal Alderson explains from Cape Town.
Mavis Mamba travels by public transport to work every day. She spends about a third of her salary on it, but says she's lucky to have a job. In a country where 1 in 3 people are unemployed, Mavis is the sole breadwinner in her family of 8. And the proposed tax increase from 15 to 17% is making her anxious.
I think the tax will make our lives more harder because we struggle now And then now if they put a VAT, we're going to struggle because the prices of the bread will go up, the taxi fare will go up. So many things, that the clothing, we will struggle, even as the poor people, it's going to be bad for us.
The Democratic Alliance, the second biggest party in the country's ruling coalition, says the tax base is too small to carry additional tax increases without choking investment and further damaging the economy. It's the first time in post-apartheid South Africa that a budget hasn't been passed. Parties in the coalition government rejected a proposal to increase VAT because it would hit the poor. But it leaves a $3 billion hole in the Treasury and the Finance Ministry having to pay for social services hit by Trump's aid cuts. South Africa has a budget of about $110 billion and unions want the government to cut its own spending first.
Workers are struggling to cope with the rising cost of living. Electricity, transport, food, other essential goods that workers spend most of their salaries on have actually increased by far above inflation. Workers' salaries often don't keep pace with inflation. Most workers are supporting relatives who don't have jobs, and they're heavily indebted. So any additional money coming out of workers' pockets each month makes it even more difficult. Workers are not surviving as is, and a VAT hike treats everybody the same, whether you're rich or poor. Workers don't really have any spare money to give.
Trade unions are urging the country's tax authorities to tackle tax evasion and customs fraud, which could bring millions of dollars into government coffers. They also want the government to support the ailing state-owned electricity supplier so that consumers and industries have access to reliable electricity that can boost the economy. Mavis and others like her are hoping that whatever the coalition government decides won't mean taking more money out of her pocket. Crystal Alderson, TRT World, Cape Town.
So that was your business news for now. Thank you so much for watching. Our top story today, the fact that those US tariffs on aluminium and steel of 25% have now come into effect. If you join us tomorrow, good chance Donald Trump might even change them. Hope to see you then.